Something shifted in the market this week, and the charts are making it pretty clear where the pressure from the Middle East is actually landing. It's not where most people are focused. The S&P held up relatively well, but Europe? Different story. The DAX and the CAC both took significant hits and are back inside the ranges. The bull egg we were watching for didn't happen, and the euro just broke below a support level it held for 9 months straight back to June 2025. And that's not noise, that's a clean structural break. And then there's oil. Crude is surging and it's pulling the whole commodity index right up with it, which, if you watched last week's video on the Iran situation and the Strait of Hormuz, you probably saw this coming. The market is telling you a story this week. I'm going to walk you through exactly what I'm seeing across the indices, currencies, commodities and crypto, and what I'm watching going into next week. And if you're new here, I have a free swing trader playbook at investorhorizon.com, link in the description below. It walks you through exactly how I structure and manage trades on the weekly time frame. Takes 10 to 30 minutes a day. Don't miss it. So let's get into it. Starting with the analysis of the SP 500, and as you can see, so this is the drawing from 2 weeks ago, and last week we had a different video format, so this week we are back to the usual weekly analysis. And as you can see, right, the SP 500 is just holding fairly well. It's a little bit more volatile, you know, we have a bit more of a correction, but our scenario basically is still at play. Again, this is healthy, this is good, and this is the kind of thing that we want, especially after the strong push that we've had since April 2025, right? So see the correction. There's nothing dramatic, right? None of that, even despite the war in Iran, right? None of that is abnormal. I mean, look what we had in November, right? Look with the Trump tariff crisis, like Feb, right? Look at this. This is like way more dramatic than that, right? So at least on the US market right now, from what we can observe, there's just nothing dramatic, right? Love to see consolidation, made head up a bit lower there, but you know, we're forming a triangle. Consolidation usually happens such a way. Look at this, you know, that's how it usually happens. So that's what I'm anticipating. And as I was saying, around Q2 this year, hopefully a break to the upside. Of course, it's going to depend on, you know, the war and everything that's going on, but there's nothing dramatic on the US indices at the moment, not on the SP 500 and not on the NASDAQ. Similar story, actually even less volatile than the SP 500, considering that usually it's the opposite. But you know, you can see that our little wedge triangle there is still holding. So similar thing, we might have a tennis match between these two lines there and a break to the upside in Q2. We will see. We are ranging, it's healthy, there's nothing abnormal or dramatic on the US market, at least at this stage. If we now move on to the Europe indices, well, it's a very different story. Look at the DAX, right? Like early Jan, we had a beautiful break, pullback, and we were anticipating probably a bull leg, right? And then the war, 2 weeks ago, week of March 2nd, look at what happened, right? The war just, I mean, the current content just slams it back down within that range, right? Very tight, beautiful range. We're back into it. We held support right there, right? Bounce back, and that's it. You know, we are back into it. And we need to see, we need to see what's going to happen over the next few weeks, right? So right now we held that, that's good. So there's nothing again critical there, but it's a good thing that we're holding that level, right? If we do have a break, you know, it may be so that we have a much deeper range, right? And we may find bottom like somewhere along these lines, right? That will be the next key level to watch for. We're not there yet, right? Or maybe the bottom of that channel there as well. There's two, I would say. You can see, right, we're in this like channel for the DAX, right? So we're not there yet at all, right? But probably if we do have a break of that channel there, we may consider like a bear face for the DAX, which we are not anywhere close yet, right? But that's kind of the mental image I have. And looking at the CAC 40, it's a bit more dramatic actually, because the CAC, I mean, actually it's not, apologies, it's similar, right? Except the CAC has been in this range for much longer, a larger range, more volatile for longer than compared to the DAX, right? And we broke back right into it, and as you can see, right, we were above there back into that like tighter range above the big range. We closed above, but this week, we opened below, right, that level. We tried to push through and didn't quite make it. So we are back within our range in there, and we're still in an upward channel there for the CAC. So it may be so that, we're just going to find bottom a bit lower. And again, I think Q2 we may have a break, but it's largely going to depend on the current context, right? People are afraid now. There's a lot of sell-off, so that's it. This translates literally, as we say every week. The graphs translate people's emotion, right? The buyers and sellers, a lot of fear, a bit of a positive week there, but we're back into the range, right? So I think this level there will be really key, similar to DAX of that upward channel, right? Let's see. Moving now into gold and silver, let me check. Yes, we're on linear scale. So gold and silver are still holding up to the scenario that we planned, very volatile past few weeks, massive correction, push up, a bit of a correction with the context of the war, right? A couple of weeks of war, you can see red. But the scenario at play is still like consolidation, taking our time around the previous high. And this is healthy. We are pausing. I would love to see a beautiful structure like that with reduction of volatility toward the end and a clean break, and that would be a great speculative trade. But that will take many months, and probably around this summer we may have something that looks good if it happens, right? So that's kind of about it. But a pause is welcome after the strong push we've had on gold, right? This is welcome. This is good. This is healthy. And a bit of a similar story for silver, right? Silver was even more dramatic. Look, I'm on a linear scale. I'm actually going to switch to logarithmic just to make it more palatable. But yeah, that's how crazy the move was on silver. Much more dramatic. We are, still consolidating. So I think there's definitely may have like a level there, right? We are bouncing off there, so remain to be seen how we are dealing with that, right? Before heading back to the top over there. But let's see, right? Definitely, the war has generated a bit of a sell-off, so I would anticipate a bit more sideways action for a few months. And as some of the currencies also take a hit, like we'll see in a few minutes, like the euro actually took a big hit, right? And we may see to a big sell-off of euro and increase of the dollar strength. As the currencies, some of them take a hit, it may be a favorable scenario for precious metal commodities to appreciate, right? So talking about commodities, I wanted to now cover the DBC, the commodity index, right? And look at that, right? Like the past couple of weeks have just been massive, right? About a month plus ago, we had a clean break, push, pull back, and then a big run off in the last 2 weeks, especially with the war and the price of oil just shooting up, right? This has just dragged up big time the commodity index. Let me just switch back to a linear scale. So yeah, you can see, right, the 2 weeks ago, very, very strong week, big candles, large volumes, right? And then this week, big sell-off. Like look at the week here. We have a big week, but then the price still closed back, in the green, right? So that's just like super massive surge on commodities, right? And this is actually tied to also, the price of oil. Let's have a look at crude oil now. So I'm gonna have a look at, yes, that's one. Like look at that, right? Like, let's do, actually this is a fresh chart. I haven't drawn anything on it, but can see here we have clear level identified around there, right? Clear level identified, large base, break out of the large base. Look at that, right? There's the past 2 weeks, massive gap up, right? A lot of uncertainty. Look, this is a mini like Darth Maul, but like, this is like oil, right? This is not a stock or whatever. And, push up, push down, fairly large wicks, right? And then this week, even more dramatic, right? Like lightsaber, Darth Maul, Star Wars style, massive push down back under the base, and still, it's still a red wick, but still, like, this is the gap up, right? This is a big increase compared to last week. So this is definitely contributing to like what we just showed on the commodity index, right? The crude oil, with all the tension, with all the craziness going on with the Strait of Hormuz and Middle East and oil around the world, this is what's going on, right? So it's just interesting to see the correlation on the chart and see how the emotion, I mean, literally you can see how these wicks basically translate people's emotion, right? That's what I like about charts, right? They don't lie, right? They just tell you literally what's going on. There's no prediction, there's no assumption. I'm just reading, right? And using that accordingly to manage risk management and to have my mental image on what the market's doing, basically. So tied to that, we did say that, you know, the appreciation, we may have seen appreciation of precious metals against some currencies. And I mean, this is the Euro USD, right? So look at what happened this week on the Euro, right? We were stuck in a range. The Euro was kind of like, since basically April 2025 with Trump's tariff, right? The Euro really had a nice push up, right? Actually out of this, let me zoom out of this channel since when? Since basically, yeah, around 2008, right? The euro dollar, I mean, the euro has lost consistently strength against the dollar. So we are in this downward channel, really well respected, right? Look how it's just bouncing. And we broke out actually in April last year. We had a run up, tight consolidation. We had a few attempts to push through, which didn't quite make it. And now look at the past 2 weeks with the war and a break below that clear level here, right? We may assist basically to now a downwards move, right, for the euro, an appreciation of the dollar against it, and reintegrating basically this like downward channel right there, right? So yeah, it's consistent with what we see on the indices as well, stock indices. So this may be the start of a down move, maybe fairly large for the euro. We will see, right? I don't see the future, but I just, you know, share what I see on the chart. And I wanted to show you as well what happened. I mean, we talked about that for a few weeks as well, but I wanted to show you on the euro Swiss franc what happened a few weeks ago. Also in a downward channel, right? We had this base tasted for a few years, you know, 1, 2, 3, 4, 5, 6, 7 times and break, right? And we did say that was end of Jan. You know, this has been tested. This is like the reverse pattern of what I look for stocks. And we have very strong chances that now we assist on a downward wave for the euro, who's going to lose strength against the Swiss franc. And this is what happened, right? Not prediction, but it's just the charts tell you, right? There's been a lot of resistance there, and then you have such a clean break, pullback, confirmation, right? So this is just consistent as well with the picture that we're having on the euro dollar. I'm switching back. We have a clean break there. So what we need to see, like, are we going to close below that level, right? So I mean, it's not a clear level, but it might be somewhere there, basically. Are we going to confirm that and head back down towards the channel is a question, but that is definitely it's a strong signal, right? So to be seen for the next few weeks, but yeah, this is kind of the situation now. So yeah, it doesn't look too good for your market, but again, nothing dramatic. I would say this is for the stock indices. I would say it's more like of a range, so, you know, moderate risk management. Opportunities may still appear, right? I am in position of a few stocks on the euro market. My trading plan on a weekly time frame allow me to absorb the volatility, and some of them actually performing and making money, right? So it's not all bad and so on. And we're going to finish up now with cryptocurrencies, switching to logarithmic chart with Bitcoin. And well, Bitcoin actually, a bit of a surprise this week, managed to close back above the all-time high of 2021, right? Clean week, clean candle. $71.7 thousand at the time of recording this video. So we did say, for me, this validated the bear market, right? And this may or may not, but it may only be a pullback, right? Similarly to how, you know, when you break out of a range, you know, you have a pullback, as we saw for like DAX and so on, pullback and then run up, right? This may be only a pullback above and head down, right? It may also be like we are reintegrating basically this like large range, and that the current condition in the world are going to favor Bitcoin similarly to like precious metal and commodities, right? So we will see. But this is a bit positive. It kind of saved the day for Bitcoin, and we need to see if that holds or not. And finally, finishing up with Ethereum, a bit of a similar story, right? We found, like we did say that it looked like we had the formation of this large triangle on Ethereum, right? I didn't know, basically, we found bottom there, right? And we didn't know if we would cross and then head over that resistance line, which had, strong support there in the blue rectangle. Right now, it looks like we found support right there on the channel, which is consistent with the analysis that we made, right? And similar to Bitcoin, probably the current context is favorable for cryptocurrencies. So we need to see, right? We need to see what's going to happen in the next few weeks. Are we going to see a sideways consolidation here and a break that would launch maybe a Q2 this year, and toward the end of the year run up back to all-time high? And again, we would need some time to kind of absorb this, right, in a healthy way, and then head back to the upside, maybe for another bull leg. Who knows, maybe next year, maybe 2028, I don't know. But definitely this, we will need to take time, right, to absorb that. And that's about it for this week. If you'd like to learn about, swing trading over larger time frames, check out my website. I have a free guide there that I compiled for you. It's pretty handy. It's the kind of stuff I wish I had when I started trading. So check it out, drop your mail. Have a great day, and see you soon.